All right, guys, welcome back for another video. In today's video, I want to talk about Bitcoin price action on the 3-day. We just got the 3-day close. But first, I want to talk about the recent Tesla news. If you guys haven't heard the news, Tesla has sold 75% of the Bitcoin on its balance sheet. Back in January 2021, they had purchased about $1 billion worth of Bitcoin, slapped it on their balance sheet, and that was a very bullish catalyst for a little bit of a further run upwards before the market ultimately topped out. Um, you know, uh, Tesla adding Bitcoin to its balance sheet had been what a lot of people thought was going to be a trend of different companies adding Bitcoin to their balance sheet. Well, unfortunately, we haven't seen that. Right? Tesla was really the only major company that did that, and now they're selling off their Bitcoin. Well, not all of it, but 75% of it. They still do have Bitcoin on their balance sheet. Um, but we just didn't see that trend of different companies adding Bitcoin to their balance sheet. There's a number of reasons for that. One reason being regulations. Some companies, even if they wanted to, couldn't hold Bitcoin on their balance sheet. And I think the major reason being, though, is that some suspicion or skepticism about the amount of liquidity in Bitcoin. And I think, that is a valid criticism. I mean, Bitcoin can be at times extremely illiquid due to the inelastic supply curve. If you're a major company, if you're in the S&P 500, um, you may be concerned about the amount of liquidity in Bitcoin, right? Because ultimately, if if you have Bitcoin on your balance sheet and or you hold Bitcoin in your treasury as a S&P 500 company, that Bitcoin needs to be liquid, right? They need to be able to convert it to cash to finance their operations, and that's kind of the whole idea, right? That you have that reserve that is liquid but doesn't lose value. And I think in a little bit of a roundabout way, this actually demonstrates that Bitcoin is liquid, right? You have a major company like Tesla coming into the market and slapping $1 billion worth of Bitcoin on their balance sheet, and then there's enough liquidity in the market for them to exit that position and report it without basically tanking the market. Now, if we go back to the price chart, uh, if I remember right, yeah, Tesla started adding Bitcoin around right here, right in early January 2021, so right around 33,000. And they ultimately, on their earnings report, ended up liquidating most of their holdings around 28,000 right here. So actually, right before the final push down, I shouldn't say final push down, but the last major push down we've seen. So now you can add Tesla to the amount of funds that have either gotten liquidated or sold off or reduced their balances. Really, it's really just Michael Saylor is the only whale left, at least in the public arena. But going back to the price chart on the 3-day chart, you do see this 3-day close above these highs right here on decent volume. So, a lot of times the 3-day chart will take out some of the noise. Whereas on the daily chart, a lot of times, everybody's got their eye on the daily chart, and it is very significant, but sometimes some of the formations put on the daily chart can be a little bit misleading. And, waiting for a 3-day confirmation can, take out some of the noise. So you do see that close above the consolidation range, whether you want to go down on the daily, right? This, if you go down to the 4-hour, really this was your last area of resistance right here. So, there's always the reality that price could come up to this area, test there, and sell off. But once you get the close up above, whether you call this a price shelf or price pause, basically what you see is that that resistance being cleared, And so I guess we don't, actually have it precisely on the 3 day, but it's close enough. We do have it on the daily. So anytime you see that, this being the last line of resistance before the liquidity void up here, of course, it's better seen on the 4 hour. But when you see that region getting cleared, um, generally price would, after clearing that and closing it on volume, which we just saw, would generally run up, fill the liquidity void, and you'd be generally looking towards higher levels up here. Of course, there's no guarantee in life or trading, but um, you know, here would be an area of interest. Um, whether you put it here or here, the areas that the idea of why this would be an area of interest is essentially this is your last up close candle before the consolidation range is broken. Now, some people may say that it was actually broken up here, but really this is this is where you get the impulsive leg lower to break these lows here. So this was the point where you see a lot of offers coming into the market and selling very aggressively, moving price very quickly towards the liquidations down here. So you could describe this as a liquidity void right here. Really, it's up to this level. And there's a lot of different price distinctions within this level, but of course, you also have your range high up here. So once you start getting into this range, um, as you get further in, you start getting into areas of premium. So, there's really no telling. Again, this is all hinging on the assumption that we do run up and reach for liquidity above. Of course, that's not a guarantee. Anything can happen, but if under the assumption that we do reach up and reach for liquidity, then this area would be considered less of premium than, say, the range high up here. And that's generally areas where I would be looking to take profit on a long position, but not necessarily open a short position, right? If I were inclined to open a short position, I would be looking more up towards like the 33,000 level, sort of up by these highs right here. Um, yeah, and if we go to the weekly chart, the weekly's got a long way to close, but it does look like we are getting a little bit of those, little bit of a trade up above this level here. Again, there's quite a while till close. Let's see. Let's go on the daily chart. Yeah, you get a pretty fresh clear right there. Now you've got this indecision candle on the daily. So this is a level where if the daily was going to put a top in right there, it would generally it would have to take out this low at some point. So that's an area to mark off on your chart. We can move this off. And yeah, if you see this level ran here, there are some circumstances on the daily where you do get this type of formation, and the price will run down just below this level and then pick up liquidity there and then run up. But I think the one distinction to mention about that is if that does occur, what generally happens in that situation is that it happens very quickly. So price will run down, take the stops out below this level, and then move up very aggressively. So you could, if you wanted to trade that, you could set an alarm at this level, and then when price trades down just below there, enter a market, and then it's the type of trade where if you wouldn't have to wait very long to know if you're wrong. If you're going to be right on that trade, you would know very quickly, because in a liquidity run like that, you're going to get a very quick reaction, and then of course if that's not what's happening and something different's happening, then you wouldn't want to hold on to the trade very long if it goes against you. But just something I keep an eye out for. Let's see what that looks like on the 4 hour. Yeah, I've got this level right here. Let's go on the hourly. Yep. So that would be your price shelf. So this is actually a good thing to mention. Brings up one of the different distinctions that I typically talk about. So right here we have a classic price swing right here. You can mark that off by using a 618 retracement. So this area right here would be considered a clean break or a clean breaking point. And then you see price comes down, tests that level right here, marked off by these highs right here, or these lows right there. I'll take the 618 off the chart because it's just a little bit confusing. I was just using it to kind of frame the context for the swing. But you get break above and then test down, and then you get this sort of distribution pattern. I bet if we went to the RSI, there would be some distribution. Yep, you got your RSI, so you got prices starting to change your state of delivery, and you're getting lower highs on the RSI. Now, if we go back to price chart, you see. So this is actually the area where you got to go down to the 15-minute to see, but you get these runs up. I would say you get this area right here where you're getting a price kind of coils up into this illiquid range and then makes one push up, and there's your this is your area where the move's being faded. Maybe Elon's being coming out on Twitter and announcing that he sold his Bitcoin, whatever the reason may be. Somebody sold or used this liquidity up here and sold. But what you essentially see is you see this liquidity drying up, makes one push up, and then comes back very quickly below those lows that ran up above. And that's kind of where this swing starts topping out, right, marked by the candle low here. So when you see that, you can kind of know that price is going to make its run lower. And in this case, this would be called like the bottom of the price consolidation. If you think of it as the low set in after the impulsive move up, so you get that low, and then you get a retest right here. One distinction to mention there is that whenever you get this type of price formation right here, generally that's going to have a little bit of a dualistic nature to it, because this is a price distinction that is tradable, right? And it will act as support generally. But on the second time that price hits that, so if we just take everything off the chart, mark this low off again, or maybe use the candle bodies, so price comes down, test those candle bodies. And now if price comes down and violates these lows set in at 22940, this wick low right here on Bitstamp, now this low is at that point going to have a different reaction, right? It's generally going to be a good area to manage risk rather than enter a trade. Whereas on the first test, it was a good area to add risk. Now, if price approaches it on the second test, it's generally going to be a good area to manage risk. So that going back to that dualistic nature, and the reason being is because if price does run below those lows, it's generally going to do a swing retrace. So you want, maybe if you put your 618 up here, probably would run down for the 618, or maybe even do a little bit of a lower retrace. But that's generally the rationale behind why I would put a stop loss right here and manage my risk accordingly right there. So I think that's really going to do it for this price analysis. Again, so it's hard to say exactly what price will do. Of course, price can do whatever it wants, but part of being profitable is just managing risk and managing expectations as well. I hope you guys like this video. If you haven't already subscribed, just subscribe to the channel, and I'll catch you guys in the next upload.